by RE/MAX Diamond Realty.
All right, welcome back, everybody. We are talking about the I word tonight, insurance. It is something each and every one of us has to understand, has to do. Not that many people know about it as much as they should, and the ladies who put the I in insurance, because certainly I do not know a whole heck of a lot, are Gina and Liz from RE/MAX Diamond Realty. Half a day, ladies.
Half a day, Jason.
Okay, we've talked about so many topics in this program over the last 5 years and everything. Insurance is something we've touched on lightly, so I was hoping we could kind of like deep dive into that, because I'm confused now, because you guys have actually motivated me to find property, build a house, possibly rent it out, live in there, find my dream home and everything like that. But I'm wondering, can I actually take out an insurance policy for every phase in that, or do I have to take out different stages in when it's being built, when it's finally ready as homeowner insurance and everything, or is it separate policies, or can I do like one-time shot?
Well, from my experience, when we were doing construction, my experience was the insurance policies are separate. I can certainly get them from the same insurance company, and we're not talking title insurance. I'm talking about the structure of the home itself, because initially when we built, my experience was that my contractor, he wanted to do the project but had difficulties with the bonding. So we worked out an arrangement where I helped him with the bonding. So I basically paid for the bonding insurance for him. We knew each other really well, so it worked out. But so that was bonding. Yeah, you bargain with each other. I got a better rate, and I helped him with the bonding. So bonding insurance was during construction. It basically protected me, protected the bank in case he couldn't finish the projects. So that was one form of insurance. I got bonding insurance, which is a separate policy, and that goes away after the house is done.
Obviously this is, Liz, this is a short-term thing, because say if your house is built in 6 months, or if it takes like a couple years, if there's a typhoon and your hollow blocks blow away, or if unscrupulous individuals run by your house and they steal the materials and everything like that, you're going to need to replenish those lost funds.
Right, but bonding insurance also protects you, the consumer. So for example, if the contractor fails in their job and they don't complete the project, someone has to finish the project because you're already in the process of getting the loan. So the bonding does protect you in terms of the bonding company. Then at that point, they'd have to find another contractor to complete the job. And the insurance, the bonding insurance, will help pay that part of it in terms of the completion, especially if you've been paying the contractor, then they leave and you're stuck with a job. Someone has to complete that, because once you go to the bank is going to say, hey, we can't complete your loan package until the project is completed.
That's a scary situation to be in.
That's what bonding is for.
Okay.
Yeah, that's exactly what bonding is for.
Okay, now I'm curious about this, because does the bonding process work like traditional insurance policies, where I've got a premium I've got to cover and there's like a set number of installment payments or anything like that? Or is it like, just for the duration of the job?
It's for the duration of the job.
Okay.
Once the
Do I have to
job's
pay everything
completed,
up front?
it depends on the insurance company. In our case, we had to pay for it up front.
Okay.
But I think it could be spread out. It depends on your insurance company.
And the bank won't, let's say the bank won't allow a project without the bonding. So let's say you're going to the bank and you're doing a construction loan. They require bonding. So the bank is very meticulous about ensuring that the contractor has all the proper documentation, that the contractor is fit for the job, and that they've been reputable through the process. Because if they haven't worked with, the bank has not worked with them for a while, they want all that documentation in place. Plus, they do want to see bonding insurance.
If you're already working with a lender and you're getting a construction loan, I have to say you're pretty much protected, because that bank is not going to issue a single penny to the contractor if there's no bonding involved.
Yeah.
Because they're looking out for your best interest and theirs. Because if that contractor doesn't finish the job, you have to hire somebody else to come in and finish. And where are you going to get the money?
It's insurance for the bank as well.
Yes.
That's right.
Okay, I never even considered that. Okay.
Yeah, absolutely.
That makes a lot more sense now.
It's so they know the job's going to get completed. But what if you're in a situation where you're lucky enough to be able to build your home, or build something like you're adding into your property, and you don't need a bank? Let's say you've saved for years and you finally are able to add in that studio extension, and there's no bank involved. So you go out there, you get quotes, you hire a contractor. Are you necessarily going to ask the contractor to include bonding, to get bonded? I find a lot of people under
Don't.
those circumstances
won't.
don't.
If it's just a small job, an
Yeah.
extension, I mean, may cost what, 5, 10, 15,000. They
Well,
may
yeah,
not.
that's a small job.
Okay,
Small
yeah.
job.
but
That's a
just
small job.
Just because people do not, does that necessarily mean that that's the right thing to do? Do you recommend that
what
people still
we're-
get bonding?
What we're pointing out is if you're investing a significant amount of money, so yeah, 5, 10, 15,000, it wouldn't even be worth it to the contractor to go get the bonding. Remember, he's paying for it. It's not free.
We call that CYD in the business, right? You cover your debt and cover your dogging.
Yeah, exactly. I like that.
You
So
can use that, by the way.
Okay, I have
No-
your permission.
no charge.
No charge.
I'll get the bonding for that so that you can use that in the
Absolutely,
future. All right,
Jason.
see, there you go.
You know, under those circumstances, the contractor is not going to waste his money
To get
bonding. And if he does, if you insist, he's going to charge you. And let's face it,
They'll tap it.
they'll tap
add
it in. Even if it's a big project, let's say you're spending $80,000 because you're building a one-bedroom studio and you're adding it onto your home, so your your older child can move in, or your parents could move in, or a family member wants to use it. They want to move in. So you're spending a significant amount of money. 50 to 80,000 you're spending, that's a lot of money. You may at that point say, hey, listen, I've got the money saved up, but I'm not going to let you start the job unless you prove to me that you've got bonding. And sometimes people forget about that. And that's why
Yeah.
we wanted to talk about it a little bit.
And bonding could be costly. It just depends. And again, we talked about that before. If you do get a contractor to do the small jobs and you're unable to do the bonding, then what you should do is phase out your payments, installment payments in terms of parts of the completion as the project is completed. Phase it so that you pay as the job is completed. We've had so many stories of people paying up front and the contractor has absconded. They disappear, you can't find them, they've lost their money.
And that's terrible. Okay,
Yeah,
final
yeah.
question before we wrap this one up, because this is fascinating. Do you find that insurance companies offer like package deals where they'll offer the bonding insurance for the construction phase and then the homeowner's policy going forward, or do you see people going with like different insurance providers?
In my case, and Liz just went through it, in my case, I went with the same company.
Yeah.
Because
for
I like
everything.
one-stop shopping, honestly.
We
Yeah,
like one stop,
yeah.
and part of it too is they could offer you a better rate
Yeah.
because you're an existing customer, and if you have so many properties, it does help. You know, plus
You
you
get
want to,
discounts.
you get a discount on
Yeah.
it.
All right, so what we have learned here today, ladies, is cover your debt, cover your dogging. That is the most important, and that's the purpose of insurance.
Absolutely.
All right,
Absolutely.
everybody
Bonding
in.
insurance.
All right,
Come on, Gina.
1, 2, 3, go team. Thank you so much. We'll see you next
Thank
week.
you.
All right, insurance, that's what it's for, and that's why you need it. All right, that is it for the show. Hope you learned a lot, and we'll see you next time.
Close